On guys, welcome on into today's live stream, and we are witnessing right in front of us the highest put call ratio for equities and indices based off of CBOE right here that we've seen this year, and the highest we've seen the past 2 years since the pandemic, essentially since March of 2020. This is actually pretty insane. If we take a step back and zoom out on the bigger picture timeframes, what are you going to see? Well, this put call ratio essentially has been trending up, and we've seen like these higher spikes and like higher lows, meaning that more puts than calls are being generally bought. And it's generally used as kind of like a contrarian indicator. And, when people start buying a lot of puts, and you don't want to be the last one sitting there buying puts, right? Is what it really means. And really knowing when the end of the dip, end of the rip, whatever it is going to be, is very difficult to know. But in hindsight, you can look back at this and say, oh yeah, it actually was a really good time to go the other way when everyone was buying puts or calls, right? But we are seeing a spike to the highest of this year, and to the highest that we've seen. You got to go back again to March when we were in absolute free fall to see the amount of puts being bought right now relative to calls, that ratio. Over 2, meaning that we are seeing more than 2 puts being bought right now, today, this session right now, than every call, which has me thinking something's up. Okay, has me thinking that something is up to finish off this week. So while it's been kind of a range-bound week, I'm somewhat not concerned, but I'm excited to see what happens in the next 2 days, right, to finish off this shortened week in the markets. And if you take a look at the overall Fear and Greed Index, this is far and away the highest 5-day average of the put call ratio, really just skewed because of today's massive move that we've seen, and it's not even close. I mean, the highest prior was around 1.11, and now we're up around 1.22, which when you kind of zoom it out and flatten out 5-day average, that's a lot. So we're going to see how today finishes up. We're kind of teetering on the edge of dumping. Here's a look at SPY, where we take a peek at SPY. Let's go to the 1 year, 1 day chart. We're looking at the weekly. Let's go to the 1 day. We're in this range, 383. We briefly got up there today, and then a false breakout, fell right back to the downside. And then 378 is our kind of low that we're holding. Roughly speaking, came down a couple times, a bunch of wicks at that level. We had this one weird day down here back last Thursday, but almost a week ago now. We had a big move down, then came right back up and closed well above that. Even above that 380 on SPY. So kind of a weird day there. So that wick is interesting, but the majority of wicks have held around this 378. And today we're like teetering on that 378, like right now as we speak. So we're going to see how we end up finishing off today after it is said and done. But we got about an hour to go until the close. So here's SPY. Looks like it's right there as we speak right now. Tesla having a bounce. I'm actually in a Tesla as long as this. Well, this looks like we're going to have to get stopped out of this guy. I'm in Tesla. Now I'm going to get stopped on this play. It's a small position, looking for it to hold VWAP. It's been having decent relative strength versus SPY. The problem is that if SPY falls off into the end of the day, it's just going to fall off too. So outside of that, like, to be honest, not too much going on. Necessarily for me right now, kind of watching and observing at the moment to see what the heck's going to go down into the end of the day. So I'm going to see how this area right in here, this like 1125 holds. If this area holds, great. If 1125 goes, I'll stop on that Tesla play. I entered somewhere like 10 minutes ago or so. So we shall see. Jobs number hedging us insane. Yes, I am really interested to see now, because we have jobs data tomorrow. So this put call ratio, I'm curious to see if this has to do more with big money loading. Somebody knows something, and we just see kind of like a precursor to a dump day. And we see a dump to finish off this week. And we're teetering on a pretty key spot, it looks like, on SPY. And I could see, especially during what is supposed to be the Santa Claus rally week, right? We start to break down. We could accelerate to the downside. People start panicking, end of the year, whatever, end of the world. They start thinking, I don't know. You kind of add a bunch of factors in, and fears kind of take hold. So I'm really curious to see how this week finishes up. And you've got the jobs data. We have, jobless claims coming out tomorrow morning, 8:30 a.m. Eastern time. So about an hour before the market opens. You got that data coming out tomorrow morning that could kind of mask a pretty big move to the downside or upside, I guess, in this case. This put call ratio, I think, is a really interesting thing to watch, because what we like to look at this for when it comes, I'll go back to it here. Here's today's action, right? It's really just shooting to the upside. But what we like to look at the put call ratio for, right, in hindsight, is generally seen as a contrarian indicator, always in hindsight. But what I've been watching is that 5-day average more so this year. And this 5-day average has been pretty good in terms of finding like relative lows, like coming in pretty close to relative lows. Not that we necessarily need to see a low like right now, but it tells me if we get a pretty big sell-off, like, and this goes even higher in the coming days, like that might not be a terrible dip to buy. Like looking back at, and we'll go, 3-6 months from now, we'll look back and say, yeah, maybe it wasn't. We'll see. But that's what it's been good so far this year for, because we're obviously spiking. It could go higher. It totally could. But we'll see if it wants to continue to push higher on the old put call ratio. Really weird. Interesting. It's like concerning, but then again, it depends. If you're worried, then I can see why it's concerning. But at the end of the day, I think we're gonna see whatever happens, and we can react to that. I don't think it's gonna be a humongous problem 5 years from now, right? We'll see in the grand scheme. So let's check that Tesla. I'm stopping on that Tesla right now as we speak. SPY is breaking down, or at least it's trying to break down. So I'm stopping on the Tesla. Today was kind of a day. I had one play that looked decent, and then the market kind of fell off. I'm pretty pissed. I missed a couple of really good opportunities. I think today I could have had a much better day. It was a red day for me after a really nice day yesterday. So it is what it is, but this was a nice bear flag that I missed. I saw it. I literally saw this like right here, and I missed like entering that. Was skeptical. I didn't want to enter it too late, and we got a big move down to the downside. Then we had a VWAP rejection right here. That was an opportunity. There was also Apple was a really good opportunity today on the downside. Just kind of missed a couple of these. Apple right here as it fell below this 129 zone. Had charted out, had alerts go off. I just missed it at the time. It is what it is. And I was actually, stupidly enough, focused on this, where is it? Meta, which has got some relative strength. It's one I'll watch. As long as it held this like 116, I was liking it. It's breaking that 116. Doesn't look great. If it starts to break down, we can have a nice move back down towards that 110 pretty easily, I think. But it looks strong this morning, and so I was okay, as long as 116 holds, then I want to be long, and it ended up just breaking down below, and was kind of a dud. So using that, it just kind of threw me off from missing some other opportunities that I was prepared for and was looking for, but just to be honest, just missed them. It is what it is. So there goes Tesla back down. It's still up about 1.75%. It was up more at one point today. I did have a Tesla trade earlier, I guess, off of this downtrend break right here for a move up. It actually showed some relative strength versus SPY, which is why I liked it. Had a pretty scary situation. Not scary, not too bad, but I had a situation where I had a certain contract size on a prior trade that I had left on my order entry, or like the Webull price ladder. It left the right here, the order, like the number of contracts. I think I had it set to 5. And I had these Tesla contracts that were, up around $6 or whatever they were, $5-6. And that, for me, the sizing was not what I'm normally used to. And so I sized in based on that risk way too heavy on that specific trade for what I was looking to risk. But it ended up kind of working out, and, took that off and mitigated some of the potential downside that we could have seen. But outside of that, it is what it is. One other big thing, JNCE. Check this out. One of the swings from a couple weeks back. We've been looking at these guys in the Sunday night live streams. This thing popped off. I had been watching it, on this high volume. It's been holding up kind of weird action the past couple of months, the past couple of weeks. And finally, the high volume paid off, and it really popped. So here's a look at the 5-minute chart yesterday. They had some news in the after hours. To be honest, do I really care about the news? Do I want to think about the news too much? I want to play into that news? No, I don't really care. I get in these things, towards their lows, and I sell into the spikes. And so I sold this thing. I had some sells go off around $1. Upper 90s, and then I quickly was like, oh, what's going on? Check my phone, and then I was like, oh, great. And then I sold some more up here in the 150s. I sold some in the 130s, and I think I got the rest of it off around 110 or 111 or something like that. But that was it. So it was like a 50 to 100% trade for that. Was on small size, but that was a nice little surprise in the after hours yesterday. But it's not surprising because what we're noticing is that, it's all about the volume. Look for the volume, right? Notice this volume down here at the bottom, like coming out of nowhere. Relative volume is super, super high compared to what it was trading, in the months prior. And so, all right, let's take a look at it. And if we like it, enter the position and boom, go for it. That's kind of what we did. So that was the deal on the JNCE. And I'm going to get rid of this alert because I'm out of this position. So we're looking for more. I think I found, what do I have? NXTC is the one that I like a lot now. There's a couple that I have. I have like a basket, as they say. Sometimes I have a basket of these guys just so that I have a couple on at the same time. I mean, look at this relative volume. It's pretty crazy. It's really, really high relative volume the past couple of weeks. Really since November. It's gotten crushed. It's starting to try to firm a bottom around this 120 area. So we'll see what area holds. But that's when we'll play with the small size again and kind of just took the money from the JNCE, put it into NXTC, and we'll see what happens. But that's really what's going on in small cap land. They're still making big moves, and we still got some good moves there in small cap land. SRZN was one that we also have. It popped a little bit today, got some good volume. Just going to keep seeing if that one makes a grill type of move. Today's action, KALA, another pharmaceutical company. Boom, look at this. This thing is up 200% today. UTRS, this thing is up 64, was up a lot more in pre-market. Hoff, up 44. Like, there's still some good moves to be had. JNCE, by the way, is still up 40% from yesterday's close, so it's kind of interesting. They're not just going popping and dying immediately. They're still holding a little bit. And I guess when you get some positive news, it's going to help to some degree. So, yep, we'll keep an eye on the smalls, but they're looking decent, at least as of now, small cap land. So, something for the back burner. It really doesn't matter what SPY necessarily does. It's important, but it's something for the back burner. So, if you ask me, right, do I want the way the put call ratio this year has kind of worked? In the moment, we look weak, and I wouldn't be surprised if we dump tomorrow or into Friday. I wouldn't be surprised, but I think if we were to dump substantially hard and this put call ratio is super high and stays elevated, I think based off of what we've been seeing, it's not necessarily a bad time based off of just sentiment alone, which doesn't necessarily matter. We can of course go lower. It might not be a bad time for dip buys. Might not. We'll see. In hindsight, we'll in the future we'll get a better feel for that, and we'll see where things end up shaking out, in a couple of months. But we haven't seen a put call ratio, a 5-day average of put call ratio this high this year. We haven't seen a put call ratio in general that high this year. Like we've been saying, the fuel is there. So just to understand the upside potential, even if you're thinking that we're skewed to the downside, bearish, right? All the worries, fears, recession, all these earnings. Understand that if things were to turn around, like there's a lot of potential fuel. Doesn't mean we have to go up, no, but the fuel is there. So be open to both sides. I think is valuable, or at least worthwhile, because the last thing you want to do is have a huge bias, and then it might work right now. And if the bias is downside, and to be honest, if we close under 378, my bias would be to the downside tomorrow. But again, you got jobs numbers coming out, unemployment numbers, whatever it is. Jobless claims, we'll see. Not unemployment. It's jobless claims tomorrow. That stuff can move the markets. So I don't want to be. I'm not going to hold overnight. An option position that I can't get out of off that news. So we'll come tomorrow and we'll attack tomorrow based off what we see. But today was another downside day, and to be honest, another one that I missed was Enphase under 270. I liked Enphase for a short, and Enphase is another one that I think could see some more downside in the short side on the short side for sure, but it's had a big move down. I would like to see it to push back up, retest, and then fall back off. But it essentially did exactly what we were looking for, a few weeks back, where it had a break to all-time highs. It didn't really push, very heavily to all-time highs. It barely did, and then it broke down below this kind of trending channel to the upside, retested it, and now it's falling off in a big way. So you got a big move to the downside on it. Just didn't necessarily fit too much of in the moment what I liked, and it doesn't necessarily trade. It can skip $1 or $2 pretty quickly. The spreads are pretty big. That's a higher price stock, sure, but I'm not a massive fan of trading it the past couple of weeks that I've done. So I'm gonna kind of leave that one alone. So we talk about SPY, right? So where's SPY? Let's check back on SPY. It's breaking a new low of the day, I believe. Yeah, new low of the day. So this is not looking good. So if you ask me where we're going, right? This probably means downside, right? This probably means downside. We're breaking down under low of the day. You came up, you fell under this 378. You thought, okay, false breakdown. Cool. Bounce right back up, regain it, looking good. It looked okay. Now it's giving it back, and so now it's gone. So that's showing the weakness there. Sellers are still in control, and dip buyers are not coming in. So we're weak, right? So it looks like target-wise next is this 375 down here towards the lows of last Thursday. That's that big wick to the downside. And below that, to be honest with you, I mean, we can go for more. 360s are not out of the question. And what you look at this chart and you say to yourself, what does it look like? I mean, if you take any bias, take it, put call ratio, take that stuff, take the bias away. And what do you see? Well, what I see is, trend up, pretty big move down, and now you're in that consolidation phase and a potential bear flag continuation to the downside. So if I had to guess, that's what this chart looks like to me in terms of where I would think we may head in the near future. Probably down towards that 370, maybe lower. And as we get down there, it's going to be getting close towards those June lows around the low 360s. So we'll see if we get down towards that level, maybe put in an inverse head and shoulders, dare we say, something like that. If that ends up panning out. So there's your relative low. Here's your lower low. And then, a relative low and a higher low there would be kind of, and if it reverses, could be an inverse head and shoulders. And ideally you want the inverse head and shoulders to then follow up with a downtrend break on SPY and a big move up. So that could be something that plays out, in the future. We'll have to see. But that's an idea of maybe a possible setup. But for right now, I think I'm more concerned about, I don't really care, but that's a guess, right? I'm more so concerned about what's happening right now. And right now, market looks weak. And so finding the weaker links is where you want to be because it gives you better downside opportunities. So what's been strong, to be honest, look at this. XBI it's trying to hold on to that area. It doesn't look like it's great. It's trying to break down that trend line, but it's actually kind of holding on for dear life, barely, on XBI. See, that's there. You got XBI. Tesla, relative strength today, a little bit, but then again, I don't really care because it's gotten destroyed. If you look at the Tesla 3-month, or let's look at the 1-month chart on Tesla. If I zoom in on this is the 30-minute chart. What it looks like to me is if it gets going up over 115, this could squeeze out up into the 120s and get up into this area of consolidation back here. And that's a high volume zone. There's not much volume up into the low 120s. So I can see it get up to the 120s. So if the market just plummets, then it's probably going to pull it to the downside, you would think, or at least there'd be pressure. It's doing its own thing at this point. So I wouldn't worry too much about what SPY does for, giving you a feel for Tesla, to be honest. But that said, I think up into the 120s could be your next kind of re-short opportunity. If it gets weak there, then that could be the next signal for a push to lower lows. We'll see. All right. Let me run through the comments. Job numbers cause a big spike down to buy. I think so. And based off this put call ratio too, like we've been seeing, it has been the contrarian indicator, not necessarily day to day, but when you zoom out over the course of weeks, it's come within 2 weeks. The relative highs have come within 2 weeks of some substantial relative lows in the stock market, where some big rallies have then commenced off of that, right, across the S&P. And what I'm talking about is it spiked pretty big at the end of September, and then about 2 weeks later, we had this push to lows. And really, to be honest, end of September was right in here when SPY was at 360, and really, we bounced a bit. Almost $20 on SPY. We actually bounced about $20 on SPY, from when the put call ratio spiked to the highest point, back in September, in a matter of 2 or 3 days. So boom, really two and a half days. And then we had this low off the CPI, but then a pretty substantial rally came after that. So that low, that technical relative low, or that low of the year, was really about 2 weeks after that put call ratio spike. And the other put call ratio spike was essentially right here on the days that we were making those lows, which then followed by a substantial rally throughout most of the summer months. July, end of June into July and August, half of August. So that's what we've seen. Now that's all we have in front of us on the put call ratio. So if we get a flush down, to finish off this week, the Grinch rally, right? Instead of the Santa Claus rally, the Grinch rally, I'm seeing. then it could be maybe, you're coming at some point into a period where we may be seeing a low soon, right? Again, when everyone's buying puts, not everyone's going to win. And we know that you don't want to be, generally speaking, of course, you can ride the trends and be along for the ride, but generally speaking, you don't want to be the last one on the ride. You know what I mean? And so knowing when that happens, you have no idea. We have no idea when the end is coming. Like when is the end of the ride, right? When we're going up, when we're going down, right? When is the end of the ride? We don't know. But what you can know is you can look at the past, look at some relative rallies, look at some relative data, looking at that put call ratio and saying, hey, it's been elevated for a while. The longer it stays up here, the closer we're probably going to get to a relative low. I don't want to be short on the day we make that reversal or after that reversal. So now I got to be cautious, right? If I'm going to short stuff, be cautious and understand that the risks here, that I'm potentially late in the game. It could keep going, but I'm potentially late in the game. So when that spikes, that's like how I would take, the put call ratio, playing puts going forward. MU is at a nice support, $49. Let's see. Yeah, it's trying to hold this area on MU, right? It had this breakdown on that trend, but Semi's got hit pretty hard the past couple of weeks. Seems like it's trying to hold this low of 48, 49. Obviously it doesn't necessarily look amazing after today's candlestick right here, popping to 51. Now it's back down to 49. That I'm going to put an alert, because I want to be alerted if that thing falls into a new low, because that could be, an idea for tomorrow. So just have an alert there at that, what is that, 48, 50, roughly. If it crosses down below that, keep an eye on it for downside, I think. And face it very well this year. Yeah, it has. It has this past year. It's starting to break down now, and it could be based off a little bit of Tesla, a little bit of that, and just overall market weakness. But it's been one of the strongest stocks of the year for sure. You can't deny that. Just as of late, it's finally like a lot of like Apple, like Tesla, this is not looking like those at all. But it's as of late, it's showing some relative weakness the past couple of days, past couple of weeks. 3-4 weeks now that it's been down. Technically, it's 4 weeks in a row that it's going to be down if it holds. And this week is a pretty big down week, so I don't know if we're going to get back up over 290s, although it can move a lot very, very fast. So I wouldn't be surprised. Trapping day. It's what it seems to be like. It's such choppy, not too much. We're getting some downside continuation now, but pretty choppy. And this Apple move, to be honest, too, I liked it under 129. We got it, but it happened so fast that I was like, oh, we got under 129 right here, and next thing you know, we're at 128 within 5 minutes, and then we're at 127, and we're like, oh, okay, I missed it. I guess you could have played the VWAP rejection play, but it didn't necessarily get up towards that one. I wanted a retest of 129 for a rejection, and just never really got up there. So you miss them, you don't get them all. But which ones, out of large caps, which ones are getting hit now? The ones that have held up decently. You look at Apple, held up pretty good this year. Now it's getting hit. Let's look at I'll go to the weekly charts. Finally getting hit. Let's see. Microsoft, not really. Enphase, again, same thing. Enphase was doing really well. Starting to get hit this week a little bit. Tesla, this past couple of weeks, right, had held up decently, all considered. But that's where we're at. Traders are off sidelines. I'm curious, and I would honestly like to be, maybe you can search around on Twitter and stuff to find more data, more info on the put call ratio stuff. And I'm curious the relative put volumes and call buying volumes versus just the ratio. You know what I mean? How active are we right now? But it's funny. We've seen some of these big spike ups on the put call ratio, come around midday and then kind of peter off into the end of the day. AYRO got some volume today. Let's check on AYRO. I got it down here. There it is. Yeah, I think I was looking at this one yesterday too. Yeah, it's getting better volume. So it's starting to get better volume. They got cash. It's getting better. on that front, right? In terms of that volume is increasing while the stock is getting crushed. And it's trying to maybe put in a little bit of a relative or some sort of bottom feature or something here. We'll see if that ends up holding. But we'll keep it on the radar. I liked, QTNT, I think we talked about yesterday, spiked up, 200%. That one I could probably get rid of, honestly. But I'll keep it on the list because it came right back down. We'll see what happens. If it does the same thing that ELYS did, it could have a secondary run. So we'll see. But NXTC, I think, was one of the small cap that I like because they got a crap ton of cash, and their market cap is like 30 mil, something like that. Yeah, the market cap is 34 million, and they got like 100 and I'm pretty sure it's over $150 million in cash from my remembering this morning of checking it. Actually, I got it right here. 169.2 million as of September 30th, 2022. Last report, they're burning a roughly like, what is this compared to? Yeah, they're burning it like 18 mil. Net loss was 18.9 million for the quarter, but they say at least, and these things are never always perfectly accurate. They said that they can fund capital expenditures into mid 2025. All that tells me is that there's no need to offer and dilute shareholders until they run out of cash. And they got plenty of cash, at least to their estimations, for a while. So looks good. I'm gonna, feel much more comfortable knowing that they got plenty of cash there and we're not really at risk of an offering. So that's a good sign. We'll see what happens. In Enphase won't grow. I to be honest, I agree with a valuation standpoint. It's just sometimes it's tough to short these things that have crazy momentum. But now again, they're unraveling, so now could be the good time. And you're seeing, the stuff that's held up pretty well is now starting to get hit harder. The thing is, you look around and you say, okay, on a day like this where it looks kind of nasty, Apple's down a lot and stuff. Well, you look around in small caps and the risk on stocks, here's the list. It's like just above my head. Let me actually pull this up so you guys can kind of see the price points of what we're talking about. But here, I'll pull the risk on name. This is the risk on list right here that I have a couple names that I like to follow. They're not all red. And even the ones that are, red are only down 2%, which is like, okay, it's a lot, I guess, in large caps. But like, to be honest with these things, they can fall 5-10% in a day. They can go up 5-10% in a day, no problem, with the volatility we've been seeing. So, I mean, not that bad. So you're saying that there's some somewhat relative strength in smalls and the risk on names versus the overall like large caps that have been the beasts of the past year. And that's not super surprising given that, we're a year into this bear market. So goes through cycles. SES. Let's see. This thing is getting killed. I don't know. I would want to see more volume coming in. And it's not really showing me much. It's just making new lows every other day. It seems like it's just you're trending down until something changes here. You're just in this complete downtrend and channel to the downside on that thing. Down UVXY calls. Let's check out the VIX. What's the VIX doing? Yeah, it's still not like it's not super strong, but it's been relatively weak. But if we confirm and we flush out the next 2 days, which we may, but if we confirm, let's just adjust this line, that we're under 378 on SPY and we bleed out and we fall through the 370s the next 2 days, or even into next year, maybe just nothing happens the next 2 days and we kind of just chop around, I would not be surprised if that pops up. Nat gas dumped. Yeah, I'm pissed about this one, I guess. Although, you don't catch them all, right? But nat gas is down 8% today. It was down more, I think, at one point. Yeah, it was down like over 10. Here's the daily chart on nat gas. I missed this. I liked it once it broke down below this white zone. The thing is, I was looking for a retest back up. The thing is, we kind of got that on like these wicks right here. And then this right here, once we started to break down below this $5, was kind of, the telltale sign. Oh, it's done. And not saying it's necessarily done, but it's not looking good at all. And I wouldn't be surprised if we see a three handle on nat gas at some point relatively soon into next year, especially because we're forward looking and the winter cold and all that stuff. I mean, that trade's over, realistically on nat gas. You can get some short-term spikes for sure, but realistically, I think that the trend is probably going to be down, and it's probably going to be aggressive to the downside, kind of like how it was aggressive to the upside the past, 2-3 years. I think it's probably going to just bleed into the threes. So look for maybe re-short opportunities on that, kind of like oil almost, but looking for re-short opportunities eventually on that. Bitcoin's now I guess pop Bitcoin up because it was here. It's just like weirdly just like sitting in this tight range the past like 2 weeks, from like 16.3 up to about like 17, not even 17, upper 16s. It's just like chopping along. It's just not doing much. Doesn't look great. And if I had to say, hey, it broke this uptrend and it's probably going to roll over, sure, but it's just taking its time, not doing too much. MU short. Yeah, I think that MU Micron short might not be a terrible idea if we see further downside tomorrow. Want jobs to grow, but JPAT wants blood in the streets. And the thing that's crazy, it's you're seeing more and more of it. I'm seeing more and more of it from at least some people that I've been looking at on social media about how concerned they are for, and this is of course yet to be seen, but how concerned they are for the realities of what's going to come in the next year or two, as a result of the Fed policy, the over tightening policy and whatnot. Again, there's some that believe that they're not over tightening. There's some believe the Fed still needs to tighten a lot more. And then there's some that are like, well, the Fed's going to keep tightening more, and that's not good. So we're screwed next year. That's kind of the camp that it seems like I kind of feel like we're in. That's where my thought is, generally speaking, but I'm open to other possibilities. So they were at a 67.8% chance of a 25 basis point hike from the next Fed meeting on February 1st. So there's that. In about 2 weeks from now, we got CPI coming out. Let me see if I can pull it up. CPI release dates. I'm going to get the exact date just so we have it on file here. Oh, this is for 2022. Oh, here we go. January 12th. So yeah, about 2 weeks. January 12th is CPI day. At 8:30 a.m. Eastern time, usually an hour before market opens. Alrighty. I may have to jump off stream a bit because George, I don't know where he is. We're watching George for this past week, but his owners are just got home. Their flights were delayed. They got home and they're picking him up soon. So I'm gonna have to jump off a little bit early. But we can always run one up again at some point this evening or tomorrow night, whatever. We'll see. I think tomorrow the plan is going to be I'm going to do a small account update because I haven't done that in a while. Unpack how the small account is doing. And we'll see where we're at. But here's SPY, right? Dipping down just below that 378. Now it came down 377. Now bouncing a little bit. QQQ, by the way, so SPY is down about 1%. QQQ is down 1.25. IWM, small caps, are down 1.37, and the Dow is down 0.9. Reenter cat calls around 225. That's been strong too. Let's pull up cat. That has been strong. Sitting at 240, it's still up. It's still not doing too bad. It's still holding up pretty nice. Kind of retesting the breakout zone. 225 is kind of like that spot that I'd want to see it hold for long. Under that, doesn't look great. SPY want to stay in this range. That's what it seems like. That's what it seems like. Just wants to stay in this stupid little range. And that's like, and again, tomorrow maybe there's more news to drop or rip up. I think this put call ratio, I have been sitting here this morning. I was thinking to myself too. I was like, not that I necessarily am in the point of caring, because I've just changed the style of how I do things. And there's, I don't care. Like each day is a new day and how I view it. And each, play is individual, and it doesn't necessarily matter what the market's doing. Market's green, great. We'll probably look for longs unless, we're at resistance or there's relative weakness across certain stocks, and maybe we'll look for puts. But for the most part, each day is a new day, and I've kind of, with this fresh start, makes it super easy for me to kind of get a good feel intraday and not have to worry about what things do. But I have been thinking, like, man, it just feels like it's been too easy to the downside. Like we've had bear market rallies, like I understand, right? It just feels like it's been too easy to the downside. And I think it would be really funny to see like a crazy, squeeze out before like, a bigger move down or before new lows. Like let's say if someone was like, oh, we're going to hit 2,500 on the S&P, or let's say we're going to hit 250 on SPY. Let's say we knew that we're going to go to 250 on SPY before this bear market bottoms, which is like technically down here. Not pandemic low, let's just say it was there, which is like still a long way to go, right? If it went there. But, everyone wants it to go there in a straight line and just be like, oh, super easy. Oh, great. Just puts the whole way down, and then we're there, and then we're done, and we can buy calls. It would be hilarious if we did something like this and then this into next year. Like that would be, in my view, that would be kind of crazy, and also would be the ultimate way to screw the most people over, because you've gotten to this, especially a year in, you've got this kind of complacency in, the short side, and this trend line has been, working really nice, right? It's worked 1, 2 touches here, 3 touches there, 4 touches right here. So it looks good. Like it's been working pretty well. But, just picture the scenario where we rip above that trend line and then eventually flush harder to new lows. And it would be the most, if that were to happen, like people are already talking about how, challenging of an environment it's been the past year. And I agree, because it's not like you could have looked around and said, oh, bonds or other asset classes. It's been such a weird, compared to prior declines. Like, yes, there are a lot of similarities, but there's also a ton of differences in terms of if you look back through history, like 08, 09, you go back to 2000 timeframe, you go back to, even prior to that, we have a lot of like bear markets to look back on, but there's not necessarily, nothing is the same. There always are different, setups. It would be really interesting if we got a ripper to flush out of people out of puts, screw the people who are kind of getting heavy puts, and put call ratios would certainly support that opportunity. I could see that before a bigger move down. It would really make you want to rip their hair out. And if you were still around after this past year and made it through this, you will be wanting to be long gone, at some point, whenever that happens, right? If we ripped up, oh, bear market's over, and then, oh my gosh, get crushed, into a horrible recession, deflation, Fed over tightened, and it's terrible. Markets get crushed, job markets get hit. If that happens, oh my goodness, would that be one of the most epic, series of events in the market, I would think. D-Nut slowly inching to 10. D-Nut. Yeah, it's like weirdly got a lot of these wicks though on its way down since $11. Caterpillar, yeah, Dow stocks, man, Dow stocks, especially Dow stocks past like 2 months, killer. High protein diet. One meal a day. That 1 meal a day, I mean, that's kind of interesting. I know my dad used to try to get onto that, I believe, at one point. I've seen a lot of people talk about that in the past. SPY, by the way, look at this. This actually might be a nice little bear flag into the close. Could be something to play. Should we take a shot? I mean, it looks weak. We're under levels. We're under this recent low. I actually kind of like that, right? This would be the short, right? We right here. Your stop loss is above this like 377.50, and then your target would be a flush into the close and potentially what's a 2-1? Let's look for a 2-1 here. Let me see if I can pull it up on my phone quick and find a contract that would make sense. I'm playing this point next week expirations. I don't care to play anything closer than that at this point. Yeah, these 378 puts don't look terrible. Yeah, maybe we'll take a shot. Okay. So the play would be this, right? It's if you're entering here for a bear flag, if it is a bear flag, and or our break of pattern would be like a stop loss right here. So a 2-1 in a perfect world would be down around this like sub 376 perfect world, but we'll see. Could get stopped out immediately on that play, but it would be a pretty tight stop. So it's not like super big deal. It's a pretty tight scalp, I would say, on SPY if you were interested in playing it. We'll see. QQQ's down 1.25, SPY down 1.11. Infrastructure bill. That's why a lot of those names do well. Yeah, no, it makes sense. But yeah, you know what? That's not a bad idea for a swing, right? If you're expecting volatility or expecting a decent move, either we're going to bounce hard and have a nice up day, or jobs numbers, jobless clicks come out and we have a down day. If you were to buy, like a 80 call and maybe not, that's too far, maybe like a 379 call and a 375 put, something like that, right now, and just profit off of a decent move. Obviously, if we finish right in between, you get screwed. But I would play it, I'd probably play it for a Friday expiration. I wouldn't play it to next week. You could, but I guess you can play it heavier size if you want to do that. But that would be my take. It's not a bad idea. I got to think about it, to be honest. I had one. I don't know if I really got into the details because I wasn't moving at the time. So I kind of like covered it super quick. But it ended up working out back when we had 2 weeks ago, I think it was, the CPI and the FOMC. When we had that crazy week, I had a strangle, and I had a 410 call and a 390 put on SPY. And like we got Monday, Tuesday, Wednesday, and like we were just bouncing back and forth, and we were kind of like in between. So I was getting screwed on the option. It was like down like 75%. And then between Thursday and Friday, it ended up going like hundreds of percent because the puts ended up paying. And so we ended up going down well under 390 by Friday. And so it ended up paying pretty nice. But honestly, it's not a bad strategy, especially when the VIX is like not super elevated. I think it's not a bad idea. So I figure I should probably look into it and start mapping it a little more and doing a little more analysis on it before I would do it more often, play it with small size to try it out. But I think it's it's high probability until it's not, which is like the unfortunate thing. But if you have risk management in line, it shouldn't be the end of the world. At the money straddle could be good too. Yeah, not a bad idea. Yeah, I think I bought that strangle for like almost $6 a contract, and then I ended up selling it for like $8, something like that. So it wasn't a huge move, but $200, or maybe it was closer to $9. Might have gotten, I don't know, something like that. But it ended up being like the value of it at one point was like $1. I was like, oh, I'm gonna lose $500 on this, like, or $600. Like, that kind of sucks. And then it came back from $1 all the way to like $8 or $9 by the end. And I think I closed it at the max profit, but I closed it for a couple $100 gain at the time, which was like, okay, it did what I was intending for it to do, right? It essentially, because we went down, it essentially hedged some of the downside in the portfolio, because I did on my Robinhood that I essentially just hold stocks in there and dividend stocks and whatever, sell covered calls and just generally longs. Sometimes I'll put hedges on, but that's essentially what it did. If you're wrong on the strangle, use both sides. Straddles are expensive, but it's good. Yeah, because well, it depends on how you want to play it. If you can play the strangle or the straddle, right? So the straddle, right? The straddle, I'm getting these words like confused sometimes. The strangle is when you buy like in my case, a 410 call and a 390 put. And, ideally SPY right now is at 400. I think at the time that's what it was. A straddle, you're kind of like straddling over, you're kind of buying the same strikes, just calls and puts. It's kind of, you're at the money roughly. And it's going to be more expensive right now because the contracts are at the money, both contracts at the money, but you get a big move. You're still going to get one of the contracts is going to go to zero. One's going to go up a lot, ideally on a big move. And the same thing with buying the ones out the money. They're cheaper. They're a little bit cheaper, but there's a chance that they could both expire worthless. At least if you're buying the same strike price calls and puts, at least in that scenario, like you pretty much know like one of these is going to have value by the end and one's not, depending upon if we finish above or below that strike. Unless we finish at that strike and you get completely screwed, the double screw, which sucks, but it happens. But it's all these ways to get screwed by the market, right? But all the ways you get screwed is 100% on you, because you did whatever it is that got you in that situation. So it's like, it sucks, but you did it to yourself. By the way, this position looks like it's going to be decent. Could put a trailing stop on it, but it looks solid. Ideally, I wouldn't want to see SPY getting up over 377 again from here, because that would kind of invalidate this, but we'll see. You shall see. Still looking for about 50-ish cents more to go to the downside, and if I get that, I'll just get out. Only concern is that there's only 15 minutes to go into the close, and yeah, we're looking weak, but we could get a quick wick right back up, and next thing you know, this is invalidated. So you got to be careful when playing at the close. Could put a trailing stop on it if you wanted to. For fun, I made a virtual portfolio with stocks that outperformed this year. 44% killer. I'd be interested to see how that does, into like next year. Next year is going to be interesting. Really, it really is, because there's a lot of scenarios, right? If this recession isn't actually that bad, who knows? Then scenario, A, I guess, if it's not that bad, is that we maybe are closer to a bottom than some think. If it is bad, we might have a lot more to go. And if it extends longer, right? Because the market tends to bottom, before the end of the recession and whatnot, like decently before that. But the question is like, how bad of a recession is it going to be? And that obviously the clarity isn't there, right? We don't know. You can speculate all you want, but we don't really know how bad it's going to be. No, I like the flags a lot, but again, this is a situation where maybe it doesn't pan out. Like so far, we got about a 1-to-1. Like if you played a 1-to-1 risk reward, we pretty much hit that target just a second, minute or two ago. I was looking for a 2-to-1 in this case because the market's going to close here. Like if we get a flush underneath that low of this 376.40, like if we flush below that here in the next few minutes, I'll just take it off because the market's going to close. I guess, although at the same time, SPY does close. These contracts I can trade for 15 minutes after the close, so it's not a huge deal. If you're playing shorter term expirations, these are next. I played when we get to Wednesday, I play the next Friday expiration. Just like that's just a rule of thumb for myself. Monday, Tuesday, I'll play the same week Friday for day trades, but if we get to Wednesday, Thursday, Friday, I'm playing the next Friday, and then Monday, Tuesday, that same week Friday. Just makes it easier on myself, and I don't have to necessarily think too much. I just kind of go with the flow of running with that strategy, and that's it. Like I don't have to think about what contracts. Nope, today's Wednesday. Okay, next week. Yeah, but it might not work here. It might end up kind of faking the move down and then snapping back up. But ideally, what you want to see is it do now is it stay below like the relative lows of this flag. So you want to see it stay below here, If it doesn't and regains that, yeah, of course it could come up and reject and then fell off more, sure. But we're at the point where it's like we're going to get probably wonky action to the close. So probably just cut it off for break even or even just a small loss, just to be safe, because there's no point. So that put call ratio has come down like it always tends to do. It tends to kind of come down right after that big move, which we've seen the past couple of months, past couple of weeks, or it's done that. So just coming down now on that put call. Jeez, I hate when I'm on the drawing tool. I'm trying to move the charts. Yeah, not a huge fan of this. Look, not a huge fan. But technically still valid. Again, really, it's not even necessarily a flag. It's more so, underneath. We fell underneath this earlier low, and then we had a bunch of wicks rejecting that. So prior support now becomes resistance until proven otherwise. It's more so just support turned resistance play and not necessarily, perfectly a flag play. $376.51 solid. Yeah, it seems like it does. I'm really interested to see what happens off these job numbers tomorrow. This should be fun. But we'll see if we get a gap up or gap down. Then you kind of wake up, assess, okay, did we gap up or gap down? Cool. Job numbers. All right. Did we get a reversal of that? And what happens? We will see. Look at that. That candle was pretty quick. Now, see how the candles are kind of picking up. The volume's picking up a lot on SPY. So it gets a little bit wonkier here into the close. Tesla, by the way, is back over 112. Look at Tesla's chart. Yeah, back to VWAP roughly. Trying to hang over VWAP. We'll see what it does. I think Tesla 120s roughly, and then maybe we'll really want to gauge the reaction around the 120s. If it reacts in a positive way there and builds a higher low, maybe has a bigger move up towards. I really want to see Tesla, to be honest, up towards like that 160 to 165 to 170 area, how it reacts there. But that's a long way off, even though, it's moved a ton. It could easily get back there in a couple of days or a couple of weeks, not even. But we'll see. If it reacts in a bad way there, rejects off of that, then that's the reshort. But it's, again, you would need a big move up, which I think we could get. But no guarantees. Tomorrow, fireworks. I hope we get some good moves. It'd be kind of fun. But no need to kind of, throw away money necessarily. If this dump is hedging because of tomorrow's job number, possibly. To be honest, though, I don't know if the job number really means that much. It does, but they come out every week and they're adjusted, and then they're not even so accurate. They're like, I was seeing some stuff. I don't know how accurate of information I was even reading through, but I was seeing some stuff about how horribly reported some of these job reports have been, and in reality, the numbers are not good. They have not been as good as what some of these reports have been showing in terms of like. Market's actually not as strong as it's being shown to be, or it's being claimed to be by the Fed and whatnot, and government and stuff. So I don't know, but if people are hedging for right a jobs report that, in theory, the jobs report comes in good or stronger, that would not bode well for stocks, because that means the Fed has that ability to keep on tightening and the job market's strong, which means Fed is not stopping anytime soon, right? That's what it kind of means. And it comes in weak. Number comes in weak or low, right? Or I guess high, because technically higher jobless claims mean a weaker job market, right? They're projecting about 223,000 jobless claims. If it comes in at 250,000 jobless claims, like that would be a bad jobs number, right? Scary, I guess, in theory, and you would think the stock market would not like that, or would like that, because that means that the Fed's probably getting close to the end of their road of hikes, yada yada. But then again, and you look around, and if you look back through history, the Fed's into recessionary times, when the Fed actually reverses and goes from hikes to cuts, The market actually still has more downside to go. So there's a lot of conflicting, data points, and history isn't super clear either, to be honest, even though, yes, the tightening of the Fed by raising rates, some of that pressure in theory is ending, or we're getting close to the end of that. The damage is done, right? The damage has been done. Took plenty of Meta at $90. That could be a good buy, to be honest. Looking back, it's been relatively strong. And, obviously, if the market goes a lot lower, everything's going to go down. But it has held up with really good relative strength. So I don't think that's a bad buys under $100 on Meta, man. I've been looking decent. Tesla, I think, could be the same situation. And to be honest, the lower it goes, it's like Netflix and Meta, in my opinion, right? The lower it goes, the better. Because huge washout. And then, of course, you've got it's Tesla, right? And betting against Tesla has been, well, I'm sure you guys are aware of that, the past couple of years, you've bet against Tesla. There's been a lot of bears along the way. They've gotten blown out pretty bad. But kind of the same idea, right? The lower it goes, you're in an absolute washout stage. It just keeps going lower, lower, lower. But then eventually it's going to catch a bid and it's going to start to kind of bounce. And it might have a time where it might go from, I don't know, let's say it goes sub $100. It goes from like $80 to, back to 150 over the course of like a 6-month span. And on the way down to 80, no one wants to buy it from 100 to 80. But looking back, that'll be the pretty good buy. That might be, in hindsight, a good buy. But then again, now you look around and everybody, it seems like, is looking at Tesla saying, oh, I'm not going to buy that until it's better value. And everyone's a valuation, genius when it comes to Tesla now. Because, oh no, if based off the valuations, PEs, and this and this and this, margins, all these different things, competitors, market cap, Tesla's worth $20. Well, if you want to wait for Tesla to become $20 to buy it, go ahead. It may get there. It may literally never come anywhere near $20 for all we know. It's just funny that you hear all that stuff. You're hearing all that stuff on the way down. And I'm not really even a Tesla, bull, right? I'm not even oh, I love Tesla. I'm going to, never sell my Tesla. I don't care. But looking at it from, I think, an objective point of view is good. It's always good. Because everyone right now is easy to pile on the short side and why it sucks and why it's going to go lower. But you look at the charts, the thing is in free fall, right? Who knows where the bottom is, but at some point it's going to catch a bottom. At some point, the tide will change. And just like you look at Meta, you look at Netflix, you look at some of these other stocks this past year that at the time, horrible. I'm not touching that. They're going to zero. They're going bankrupt. No one's going to use Netflix ever again. Facebook is done. All these things, they're not going necessarily anywhere. Of course, over time, where we end up going in terms of the future and all that stuff, who knows where these companies end up, shaking out. But look what's been happening, right? You're seeing these things bouncing back in a decent way. And I don't think Tesla's going to be a massive outlier otherwise. In terms of where it bottoms, who knows? But in terms of what happens after, I think it's going to act in a similar manner. On Tesla 65, I don't think we'll get it. I think if we're going to get 65, it's not going to go straight to 65. And I think that's fairly safe to assume. Unless there's some horrible news, and we get a flash crash and just an absolute dumping, the next couple of weeks or months or into next year, who knows, right? Horrible earnings maybe, plays a role into it, which at this point, after a free fall, you could pretty much have, the crazy thing about some of this stuff is that after a big move to the downside, you could almost have the worst news hit for a stock like Tesla, and it probably won't even necessarily, and we could have a green day. It's because all the selling has potentially already been done and everyone's already there, and that's an opportunity. That news maybe is just, liquidity, provides liquidity for, shorts to cover, and whatnot. So who knows with that stuff. Own it through the Qs. Yeah, it's not a bad way to do it. Or you can own it through ARK. Someone mentioned in the video, which I've been liking them because I try to do them 3 times a week, roughly, is for some that don't know, I do have I do run and contribute to a couple of different channels outside of this one. But one is, I think they're all linked down below in the description of my videos too. One of them is stock trends, and it's been much more of it's just a technical focused channel. We just kind of cover a big macro update, current news, events, and charts, and kind of key levels to watch. But it's funny how many people nowadays, or at least now, you mention a stock and they think that you're recommending it. It's like, we could talk about any stock. It doesn't mean no one's recommending it. People take it very, very serious, where it's like, oh, because I think it's because of the culture when it comes to, like, social media these days and the market. Everyone's got to have a stock, and a lot of the big YouTubers have kind of, or in the financial space, have come on and they've had big, I don't want to say big success. I guess they had success, and they've established big followings by following one or two specific stocks, and whatever happens, oh, they're the one that got me onto this stock. If the stock does well, oh great, they're the person I'm going to follow for the rest of my life. Tesla was a good stock for like a lot of people who did that stuff, but especially here, just because we talk about a stock doesn't mean like jack. We're just talking about what's happening right now, generally speaking. All right, guys, I'm gonna have to wrap up. I know the market's like a minute from close, but George is about to head out, so I gotta wrap him up and get him set up to go. So I'm gonna wrap things up. We may, but tomorrow, Friday, we'll do a stream on Friday, not tomorrow. Friday, we'll do another Power Hour live stream. My SPY options are up like $5-10. I'm just gonna get rid of it now. Make $5 because it's the close. Whatever. That's the day on SPY. But that's the end of today. We'll see you guys on Friday for Power Hour. Of course, now we're gonna dump into the close. Yeah, there it is. Market's closed. 376.68. I'll see you guys on Friday. Thanks so much for hanging out. Like, subscribe if you're new, and I will see you guys